Hello friends, welcome to Tax Riders. So this is our third video on non-resident taxation. I am trying my best to make simplify non-resident taxation for you guys. So please watch this video. So this video is about current and capital account transaction. So what are these transactions? We will discuss in coming slides. So let's begin our first slide. So friends, this is our first slide, capital account transactions. So basically, as you know that we are discussing the foreign transactions. So there is a person in India and there is a person who is outside India. So they are making a transaction with each other. So one party of those transactions should be non-resident. So what are the capital account transactions? To make it simplify, it's related to assets and debts. If we talk about the assets, it will be non-financial assets like real estate or patents, or it may be financial assets like stock, bonds and derivative. So in case of the capital account transactions, we will get flow of foreign exchange in form of either investment or loan. Capital account transactions are restricted to certain limit as per the guideline provided by RBI. So RBI doesn't impose any restrictions for withdrawal of foreign exchange in case of decline in the value of investment. So a person can withdraw his money in case if there is any decline in the value of shares, bond or derivative. In some cases, there is a requirement of the valuation report either by a registered valuer or the chartered accountant. So friends, in this slide, we are going to discuss current account transactions. So as the name suggests, current account transactions include foreign trade, general business activities, or regular business operations. It includes interest payment on loan, net income generated from investment, also living expenses of family members such as parents, spouse, children residing in other country. It also includes education related expense, foreign travel and medical care for parents, spouse and children. Current account transactions are much smoother than capital account transactions as there is no restriction by RBI in purchasing foreign currency from authorized dealer in case of current account transaction. To prevent money laundering, RBI impose some restrictions and may require valuation report for any product and services. So friends, in this slide we will see what are the compliances and regulatory considerations to be complied. So Indian entrepreneurs who are dealing in current or capital account transaction must follow the rules and regulation outlined by RBI. So as you know, RBI is the apex body of all banking system in India. So they have governed some rules and regulation which all Indian entrepreneur has to be comply to make the current and capital account transactions. And these regulations are, so the first one is Foreign Exchange Management Act 1999. It's called as FEMA. The second one is Foreign Exchange Management Current Account Transactions Rule 2000. The last one is the Foreign Exchange Management Permissible Capital Account Transactions Regulation 2000. So these regulations need to be followed by each Indian entrepreneur to make current and capital account transactions. So friends, in this slide we are going to discuss different forms which need to file while doing capital account transaction or current account transaction. So the first one is FC-TRS. So in case of any capital instrument transfer between resident in India or non-resident of India, then they have to file FC-TRS, foreign currency transfer of share form to RBI. The second one is FC-GPR. So if there is any foreign direct investment coming into India, so FC-GPR, which is called foreign currency gross provisional return, to be filed to RBI once the shares allotted to foreign investor. FCCA, as the name called, foreign currency current account form, which need to be filed in case of any current transactions which is part of regular business operations, and this should be filed within 30 days once the transaction completion. So friends, in this slide we are going to discuss the best practices for navigating the capital and current account transactions. So first we have to know the rules and regulations. So as you know, the FEMA has been regularized by RBI, so we have to know about the FEMA, Foreign Exchange Management Act. Also we have to keep us updated all the amendments bring by the RBI regarding the foreign exchange. We have to keep proper documents with us to support our export, that may be invoices, contracts or FIRA documents. We have to monitor the currency rates to make the decisions on the right time, and also we have to monitor the exchange market to take the appropriate actions on hedging to mitigate our currency risk. So friends, this video helps you to understand the capital and current account transactions. So if any transactions you are making with any foreign counterpart, it will be either capital account transaction or current account transaction. So this is not the end of the non-resident series videos. So we will come very soon with our next video on non-resident. So please subscribe our channel for more videos, like our video and share with your family and friends. Thank you.